Let's welcome in Ted Oakley, founder, Oxbow Advisors. It's great to see you, Ted. We're seeing some of the tech names under pressure. What are you thinking overall about this group, which really has led the way?
You know, Nicole, I think I talked to you back in January that this group was fully priced. And if you look at it as far as their market cap relative to the rest of the market and what everybody owns, most people are in indexes, ETFs, that sort of thing. And most of these big techs make up those, you know, and so they'll probably be under pressure for a while. That would be my guess.
But do you think that we're going to look back? I asked this question earlier and say this was the greatest buying opportunity. I mean, it's been very evident that people are picking up a little more Apple and a little bit more Microsoft, some of the great American companies, right? The trillion-dollar companies. Do you think that there are some buying opportunities? If so, where?
Not in tech. I really think tech is still fully priced. I mean, if I were looking to buy tech, it wouldn't be on this first sell-off. Typically, and I can go back through a lot of history with you on that, but normally on big tech, on the first sell-off is not the one. And they rally off of that a little bit, but then they go to a lower low. And I think that's what hooks the average investor. They don't understand that. They want to buy on the first break. And we would not look for that to happen right here. And from a buying standpoint, pardon me?
Do you feel worried?
I'm not worried. No, I'm not worried. We have, I think I mentioned to you on the 24th of January, we've had a lot of liquidity. We had a lot of treasury. So we're in a position to where we could buy a lot of things if we got the prices. And we'll be looking at things. I think you're going to find somewhere in here, maybe not today, but somewhere in the next month or two, you're probably going to find that energy will finally get to a spot where it makes a bottom. And we'll look at companies. I mean, we look at all kinds of companies, but they've got to have good cash flow, and we've got to see the cash flow. Basically, for us, we want it to double over the next 5 years. And there's a lot of companies right now out there that can't. They're too highly priced for us to be able to get that.
So we're talking about energy. We're talking about some U.S. companies, S&P 500. Are you likely to be looking through S&P 500 type companies, U.S. large cap, or is it something else that you're looking for some key levels to get in?
You know, we normally own larger companies, and we have two different strategies. So one is more of an income strategy. The other one is a long-term growth strategy. Long-term growth, we buy the big names, but we'll look at things, for example, like Charter Communications, where, you know, you're in a broadband internet mode, and if people end up staying home a lot, you know, that will be good for them. We don't think companies like Microsoft, Adobe, they're going to be affected in price. We just don't think they'll be as affected in the business side. And so we have a really great buy list. It's just that most of the things on it are still about 15% above where we would want to buy them.
Right. And just a quick 10 seconds on something like emerging markets or small caps. Any interest in those types of investments?
You know, Nicole, I think it's too early. Small caps typically will not do as well on a down market. They'll be the first ones to go, but they usually go further too. And that's why they're small caps. So I wouldn't be in that spot right now.
Mm-hmm. All right, Ted Oakley, great to see you. Founder, Oxbow Advisors. We really appreciate you coming back on with us. See you soon.